Hello guys and welcome back. In today's video we are looking at another episode of what we started in the previous video. In the previous video we discussed about trend retracement using the Fibonacci tool, and in that video we explained vividly how we can identify a retracement by using the Fibonacci tool. And if you have not gone to the video, it is very important that you go to the previous video. So today we want to look at retracement and continuation trade. What are we trying to say in essence is that after you have established a retracement, how do you continue with the trade? Because the essence of retracement is either for a change of direction or for a continuation in the direction of the move. So basically it is important that you first of all know what the trend of the market is all about. Okay, if you are someone that uses a technical indicator, you prefer drawing your trend line. Here is a trend line which tells us that anytime price pull back towards this structural zone and gives you a candlestick formation, it is an opportunity for you to make an entry. Now, having established that, from our previous video we said once our move is established, we have a leg here. Okay, this is a move, and then we have another one. So we've established previously that from this zone, from this low to this high, is a range. Okay, and we said for us to determine our range, we'll flip the wick to the wick of the previous candle. Okay, just want to make this a bit bolder. So we said that we'll put our Fibonacci wick to wick. And having done this, look at what happened here. This move starts from here, from this low, this higher low to this higher high, and then price began to retrace. So when the price break the level of 23.6, it confirmed to us that the retracement has commenced, and then it keeps on moving until when it gets to the level of 50.0. okay, remember we are considering the leg of this point where I highlighted with a red trend line. So it moves from this zone all the way to the level of 50. So you will be asking now, remember our goal today is to establish how to take a continuation trade, because we already discussed how to identify the retracement from our previous video. So how do we take this continuation trade? We take this continuation trade by allowing the market to do what? To move to the point of 50.0%. So anything from 50, 61.8, 78.6, you can begin to look for your entry to go long. Why? Because it has already from 50 below is your discount zone. You can be making your entry at 23.6 and you put your stop loss at the previous low, which is the higher low. It will be too far. If the market goes against you, it means you will be losing so much. And so for that reason, we are taking our entry, our continuation trade advisably from the level of 50. You can begin to look for a reversal signal. Okay, and then looking at this, remember there's a previous video where we talked about looking for two major patterns of candlesticks, and we said one of those candlesticks it is important we look out for is a pin bar or an engulfing pattern. And looking at this level critically, the 50 to 61.8, you will see that we have two rejection, two pin bar consecutively, and this gave us a confirmation of continuation trade, which bring to an end the retracement, and you can see that it plays out beautifully well. So that is how to make a continuation trade. And after that, we have a new higher high, which is this now, and then a new, this is the higher I'm referring to. We have a new higher high, a new higher low and a higher high. So this is the range we want to consider using our Fibonacci. And so having put this, we are now waiting for price to pull back, and look at it. When price comes toward the zone of 50.0, just as you can see here, we have an engulfing candlesticks, and at the center we have a pin bar, and that gave us another continuation. So this is how to take a continuation trade after a reversal. Here again we have this beautiful one. You see that the reversal starts from here, the reversal starts from here, this is the move, we establish this, and then this is the reversal. And then look at what happened. At the level of 50.0, we have a pin bar that is being formed here, and that gives us a sweet entry. And so what does that imply? It simply implies that we have our stop loss below the structure, we have our entry at this pin bar, our take profit is always at the previous high, because this is an uptrend, and in an uptrend it is expected that the price moves in the direction of taking the liquidity of the upside. So you keep on repeating this over and over and over again. Right, so the strategy is simple, everything is straightforward. We repeat the same pattern. So all you need to do first is for you to be able to identify your range. Once you know your range, this move start from here to this point. So all the way from here to here is your range. So your fib is going to be from here to the range. And then what do? You carry the fib, carry your fib, place it, and then you drag it. And look at what happened. Look at it. The price move all the way to this point, and then look at it. The price come back to the level of 61. So which means that as from the level of 50, you begin to look for a trade continuation signal. So this trade continuation signal can be a candlestick pattern. You can go to your lower time frame of 15 minutes, this is H4, or 15 minutes, and get a break of structure on a lower time frame. You can go to a lower time frame and get a chart pattern. It can be a W chart pattern to give you this entry. And at the same time, you can go to a lower time frame and discover that this price has come to fill an imbalance, a fair value gap, or there is a smart money cube that is existing in that region. And then price triggers to the upside. So these patterns are very simple. This is all about trend reversal and continuation trade. Please go through this video again until you are able to be grounded. Just as we have explained in the previous video, you already know to identify the range, you draw your fib, then you look for any of these patterns. A candlestick pattern, reversal candlestick pattern, a pin bar, engulfing candle, an evening star or a morning star will take you up. Go to your lower time frame and look for the same thing, or a break of structure on a lower time frame, or a chart pattern on a lower time frame, or a feeling you can tap in and just feel an imbalance and return at the speed of light on a lower time frame. Alright, so I don't intend this video to be long. I believe you are getting value from this video. Please do not forget to like, share, subscribe to the channel, and please turn on your notification bell so that you'll be the first to get notified whenever we publish our next video. So see you in the subsequent video.